On this episode of the InsurTech Geek podcast, we're talking about rethinking enrollment from the strategy seat with Jason Gross from TruStage, recorded in person live at InsurTech New York. The InsurTech Geek podcast is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Terra, this week's episode sponsor, is revolutionizing the world of workers' compensation claims and policy management. Terra's cutting-edge platform empowers insurers with comprehensive benchmarking tools, robust management systems, and an integrated ancillary services marketplace. Discover how Terra is driving innovation and efficiency in workers' comp at terra.insure. That's TERRA.INSURE. And we're here for another episode, this time live at InsurTech New York in beautiful New York City at Pier 60 Chelsea Pier with me, the illustrious Jason Gross. Jason, how are you doing?
I'm doing great, James. Great to be here on your podcast. I've been a fan for a long time of you and Rob and InsurTech Geek. And really happy to be here with InsurTech New York Spring Conference. Like you, many of us go to a lot of insurance, InsurTech events. As we were talking before the show started, there's really kind of two seasons. There's the spring season and then the fall season.
Yep.
And to me, the InsurTech New York Spring Conference, it's the kickoff of the spring conference season. And I don't think I've missed a year. The crew here, David, Tony, InsurTech New York, do a great job. So I'm thrilled to be here.
Yeah, me too. It's fun to be in New York. Now, last year was a little warmer than this year. We got some unfortunate cold, wet, rainy weather.
And while we always love New York in the rain and the cold rain, it's not quite.
It's not quite the same. I of course, I live in Texas where it's now already almost 90 degrees and feels like summertime.
And I live in Iowa, so we've had snow. We've had snow. We've had already. I've golfed, in 75 degrees, and then the next day it'll be 45.
Yeah.
So you just have to be ready for the roller coaster.
It's neurotic in the spring, and then you have tornadoes as well, which
fortunately we haven't had that issue yet. And being in the insurance industry now for 25 years, we all like to talk about the weather, but storms, cat events has certainly become a lot more of my vocabulary than I ever thought it would as a young guy.
I bet they have. Now you went to University of Iowa.
Go Hawks!
Yeah, and you. Of course, I was at Texas A&M in the late 90s, early 2000s, and we were in the Big 12 with Iowa State, but we never played University of Iowa.
Yeah.
You guys are Big 10?
Big 10.
Yeah.
Yep.
Now, 16 teams in the Big 10?
I've lost track. I mean, it's almost ridiculous. I mean, USC, Oregon now. I thought it was crazy when Rutgers and Maryland joined. So the fact that we still call it the Big 10, I don't know. But it is a great conference. Even though it was just a year ago that the Iowa women made it into the national championship with Caitlin Clark, I'm still just reeling on that high. Good.
We'll enjoy that.
That was a pretty special moment for the Hawkeyes.
Yeah, the Aggies just keep getting close, but no cigar. The Aggie men's baseball team went to the finals in Omaha and lost in the last game 7, and then so we came in second. So second place is first loser, I guess. So
it's the nature of sports and competition. And while I live in Des Moines, I grew up just outside of Omaha, across the river, just outside of Council Bluffs. So some of my earliest, best memories from a sports perspective were going to the College World Series every year in Omaha.
I've landed some planes over there.
Yeah.
So I'm a pilot, so I like to fly around, and there's a very active flight training field over there,
really?
Across the river from
in Council Bluffs.
Yes. So
I did not know that.
Anyway,
I learned something.
It's pretty busy over there. So I always like talking about the people behind insurance and behind insurance technology. You obviously went to Iowa, and then you went to grad school, and then
actually no grad school. James, like many people, I did not have a direct path to insurance.
Oh, okay. I'm sorry. I saw 2 education.
There was a
leader executive education.
Yeah.
Okay,
so not a formal graduate program.
Yeah.
I'm just trying to give a shout out of my LinkedIn profile to the Drake Bulldogs and being in the home city and talk about another great insurance school between Drake, Grinnell, University of Iowa, even Iowa State and others. We're very fortunate to have a high concentration of some really great programs, insurance, actuary, risk management across those programs, even if I am a little more partial to the Hawkeyes and the Vaughn Institute of Insurance and Risk Management, which I happen to serve on the advisory board for. And we have a team competing in the student case competition here at the conference in about an hour. So really looking forward to that. But no.
Well, I saw that. I saw last night.
Yeah, no, they're here. I'm a big proponent of bringing the next generation into our industry, into these conversations. So a couple of years ago, I co-chaired the Global Insurance Symposium in Des Moines and created a student case competition. And it's now one of the highlights of that event. So Dave and Tony with InsurTech New York, like, hey, can we borrow that idea? Like, there's nothing unique about doing case competition. So this is the first year at the conference. They're doing kind of the final four. So I think it's UConn, St. John's, Florida State, and the Iowa Hawkeyes competing this afternoon.
You know, I spent...
How awesome is that?
It's amazing. I spent a lot of years in construction technology.
I know you did. Yeah.
And they had case competitions at every construction conference.
Yeah.
All of them.
Yeah.
I mean, all of them. The Associated, ABC, AGC, CFM, like all the major trade groups, all the subspecialties like mechanical, plumbers, electrical, they all did case competitions. And I taught for 5 years at Texas A&M as an adjunct in construction science. Actually, I taught in technology.
Oh, so we fit some teams and sent all.
I got to advise them. I was an adjunct, so I wasn't their main sponsor, but. It was just such it brought a great energy to the conference, and it did wonders for recruiting as well to bring those students in. So, you know, you didn't get recruited into insurance. You actually, you went into politics.
Yes and no. So my dad spent most of his career in claims, and he retired as a claims executive. I was good at math, so I was kind of recruited by him to be an actuary. But you're right, James. My first love, my first passion was and my first career was politics and public policy. I had a grandfather serve in the Iowa legislature, so I was the kid out knocking on doors, you know, wearing the T-shirt, vote for my grandpa, and I just thought that was so cool. So yeah, I spent about almost a decade working in politics, public policy, considered running for office one time myself, but I always knew at a pretty young age that was going to be my first career. But that wasn't the lifestyle that I would want to have, because I also dreamt of being a husband and a dad and doing the family thing. So I like to say, I always knew that someday I'd settle down and get one of those air quotes real jobs. And I mentor a lot of young people, and I always tell them, you know, figure out what type of life you want to have. Where do you want to live? You know, what's important to you? And I decided pretty early on that I wanted to be in Des Moines. I love Iowa. Now I get to travel. That helps fulfill the wanderlust that I had at a young age.
Same here.
But if you want to be in Des Moines, Iowa, and you want one of those real jobs, it's probably going to be in insurance and financial services.
Yeah.
Because that's where so many of the jobs are. So it was a bumpy transition from politics to insurance. I'll be honest. It probably wouldn't have happened, or certainly not as it did, if not for 9/11. Prior to 9/11, I'd been running a grassroots kind of think tank organization for a national organization. I ran the Iowa office, and it was right around that time the world changed, and they shut down my office, which normally not a big deal. My phone would always ring with new opportunities, but right after 9/11,
nothing.
No one was hiring, and certainly not anything in a special interest.
Yeah, I started my business April 16th of 2001.
Yep.
And I was here in New York August 23rd of 2001.
Yeah.
Went and visited my friends who lived in Battery Park City, 2 blocks from the World Trade Center.
Yeah.
One of whom worked in the World Trade Center, and then I went and visited the towers. I have a picture of myself.
Really?
The fourth
days before.
The days before. On the top with the communication tower behind me. And, we had just endured the dot-com collapse in technology, because I'd started, obviously, this company, a software company, in my dorm room. And the software economy had collapsed. The dot-com bust really hurt everybody.
After Y2K.
Yes, and we finished all the Y2K work.
Yeah, so and then it was...
like the Y2K work evaporated January 2nd of 2000.
Yeah.
And
a lot of people don't realize just how much change society, economy, industry was going through in those couple years. And then 9/11 certainly changed the lives of so many. And in mine, in a very indirect way, but it still had a meaningful impact. So I like to say, if you go into the insurance industry in Des Moines, you either work for one company for 42.5 years, or you work for three.
Got it.
And if you've only on your second one, it just means you haven't made your next turn yet. Okay. So I started off with Principal Financial Group, then went to Nationwide for 12 years, and then EMC Insurance. And so I got my three. I thought I was done. And then, 3-4 years ago, I had this really amazing opportunity to go to an early stage venture capital firm focused on insurtech and fintech. And so I'm like, okay, well, I'm done with the carrier life. I'm going to go do the VC thing now. Well, never say never, as they say. And last July, I moved over to TruStage as their new chief strategy officer. And it's been a fun and a wild ride, as you can imagine.
What does TruStage do?
So a lot of people in the industry probably still remember this company as CUNA Mutual. I've had to explain that several times. So 2 years ago, CUNA Mutual became TruStage. And CUNA Mutual, CUNA was actually an acronym for the Credit Union National Association. Quick history lesson here. A lot of insurance carriers, but especially mutuals, were formed out of trade associations or membership clubs. So before Nationwide, I was part of the Allied Insurance Organization. Allied was formed out of the Allied Automobile Owners Association or club because people were buying cars. There was no one offering insurance like they are today, and certainly no internet or anything else. So what car owners would pool their risk together and formed an insurance company. Nationwide Insurance, their roots are still the Ohio Farm Bureau. Many of their board members are still farmers from Ohio. EMC Insurance, where I worked, was formed out of the Iowa Manufacturers Association when the state of Iowa passed legislation protecting workers injured on the job, and they needed workers' compensation insurance, and there was no provider of workers' compensation insurance, so they created their own company. So TruStage, formerly CUNA Mutual, was formed out of the credit union space. Now, where mutual companies have similar origin stories, what's really unique about our company is that to this day, we are still very much associated with and partnered with the credit union movement. And then that's pretty rare. The only other insurance companies that I can think of that formed out of a small group would be like Pharmacist Mutual, Jewelers Mutual, Church Mutual, that really have kind of stayed through that course. With credit unions, we were their insurance company. So anytime they needed something, we said, yeah, we can do that. I'm paraphrasing here. So in the insurance world, there are monoline companies, right, that maybe sell one line of business, workers' comp, whatever else. There are multi-line companies, a PNC company that also, sells life or whatever else. And then there are a few, what I would consider multi-line companies. And that's what TruStage is. So we have a whole suite of individual products. We're fourth or fifth largest direct writer of life insurance in the country. We sell payment protection, or debt protection, as it's sometimes called, final expense or pre-planning. We sell property casualty. We directly, or through our partners, write commercial lines. We have a growing program book of business. And we still sell personal lines, but through partners. So we've been partnered with Liberty Insurance for 25 years to sell personal lines through credit unions. We also have a whole series of wealth products, annuities, retirement products, and executive benefits. So we are literally a maybe even multi-line company. The difference being is that the other companies you might think of that have that breadth are probably 10, 20x our size. So we're about a $4.5 billion, 4,000 employee organization, and we do all those things. But here again, it gets back to our roots and our history of supporting the credit unions, either what they needed for their institutions or for their members.
Wow. Yeah, for a $4 billion company, that's still a lot of lines. I mean, that's just
It's a lot of lines.
it's hard to really be good at everything.
Well, and that's certainly,
In general, in business, it's difficult to be good at a bunch of things.
yeah, or you just have to be really, really good at servicing and serving your customer base. And so actually the reason they changed the name to TruStage, which was combination of trust and stage, two words put together, trust and stage, offering, financial services and products for people at any stage of life, was reflecting that about 10 years ago, we started making our products available through other distribution channels and to consumers who weren't necessarily members of credit unions. So while credit unions are still very much our core, I was just in DC a few weeks ago.
Wait, let me pause there. They're your core distribution channel?
Core distribution channel, most of our customers.
Yeah.
But increasingly, a lot of our growth is outside. The credit union space has changed dramatically over the last 15 years. Not unlike what happened with banks, earlier on, significant consolidation. So there are thousands fewer credit unions than there were, say, 15 years ago. There are actually more credit union members than ever.
Oh.
So that consolidation, because for them too, just like with banks, scale matters.
Yeah, and compliance.
Scales and compliance and the technology and everything else.
Data security and compliance, and the regulatory environment. A lot of things changed and became much more difficult for credit unions.
But for those who don't know, there's several important distinctions between banks and credit unions. For starters, credit unions are not-for-profit organizations. And so they are not taxed the same way that banks are. Now, that's under threat right now with the federal government. And so, like I said, I was just in DC lobbying with them to maintain their nonprofit status, their tax-exempt status. But because they are nonprofits, they tend to have much, much broader underwriting guidelines, not only for providing accounts, but also loans. And I didn't realize this until I went to work at TruStage. But here, of course, being around InsurTech and FinTech and so many founders over the years, I've had so many of them come to me and say, Jason, when I first, set up my company, I tried to go to a bank and I couldn't get, even like the standard accounts you need, like a checking account or whatever else. But I went to a credit union down the street and they were able to provide me those services that I needed to run my company. I wouldn't be here today because you can't really run a company if you don't have some basic, financial accounts.
You got to have it.
And so they really serve a very important purpose in our economy for small businesses, farmers, founders, but they're also so often in communities that were otherwise underserved by banks and other traditional financial services. So the thing that probably appealed to me more than anything else was it's very much a mission-driven culture. And I'm at that point in my career, I could do different things. I would love what I was doing. I wasn't looking to lead the venture space, but this was such a unique opportunity with such a unique organization. And there's really something about, we all talk.
Did TruStage take on capital?
What's that? No.
So is it still
just a 100% mutual company?
Still 100% mutual.
So we are owned by our members.
Yeah, owned by our policyholders. Owned by our policyholders. I just didn't know if they, you've seen conversions, right? You've seen mutual conversions. And,
back and forth.
Yeah,
back and forth.
Yeah, and then we've seen conversions from SIGs to mutuals, and like there's a lot of that.
My last company, EMC Insurance, mutual holding company, and about 10-15% of our business was in a publicly traded, but it's not something we were really using. So I was there when we actually did a going private transaction and bought that stock back.
So you spoke here about making enrollment more seamless. So just going a little bit deeper on that across the industry, what tech and digital capabilities are actually helping, like legitimately helping remove friction in the enrollment process?
Yeah, the enrollment process, I think, is really kind of fascinating for a number of reasons. And it makes sense, especially for employers who are trying to provide, really sound financial and insurance products for their employees. Why do they do that? Well, because it's a good thing to do. And they want to attract and retain good talent. And so offering a good suite of benefits. But I remember when I joined the workforce, it was, largely just one or two health plans, an dental plan, and a vision plan, and that was about it. You look at what is now being offered through both voluntary and involuntary benefits. It's really pretty amazing. So one thing, I think even just the industry leveraging technology is bringing so many more financial services products to market than was ever possible before.
So you're talking about like cases with my company, we use a PEO.
Yeah.
And so when we go through our enrollment period every year and we have to re-enroll, they have a whole menu of financial products that we can tack on right there inside the annual re-enrollment.
Yeah. And so
that's the kind of tech you're talking about.
Well,
embedding it in the HR systems.
It's both sides of the coin. That part, yes. The other part is, and this is kind of why we've seen such a boom in insurtech and fintech, it's a lot easier, a lot less expensive to start a company than it was 20 years ago, before, when you had to buy your own servers and set up all that hardware to start a company. Cloud computing has enabled access to data and automated tools to even do basic underwriting. So think about a lot of the products that we have. Back in the day, it was humans manually calculating, rates. And so you couldn't afford to do that for a lot of products that we now have today, because we have greater access to data, predictive analytics, and automation. So I think also it's the process through enrollment, but we also have, thanks to technology, been able to bring a lot of new insurance products to market that were not feasible before.
Yeah, because the administrative load to get them enrolled was too much.
Yeah.
You couldn't explain it easily. You couldn't enroll them easily. There's too much reentry, or it was all paper-based forms process.
Exactly.
It's a total game changer. But it's almost like in insurtech, we're reaching a lot of the same things. When drones hit really big, I said, what you're witnessing with the DJI Phantom 1, for example, and I've owned all of them. I own Phantom 1, 2, 3, 4, maybe Pro 2.
We were talking about gadgets, and I consider myself a gadget geek, but James, you're a whole nother level.
It's the problem, you're like, not going to buy that. I go to Best Buy and I just clean them out, and it was a convergence of a whole bunch of technology.
Yeah.
Right. It was Wi-Fi, Bluetooth, optical sensors
all at the same time.
It all hit at the same time. It all hit simultaneously.
Yes.
Like every chipset got super cheap. Wireless became super pervasive. Sensors became like 50 cents instead of $10.
But so many of the things are cyclical. Like I get asked, being in innovation, a bit of a futurist strategist all the time, what's the one thing that excites you, Jason? And it's never one thing. It's not AI, whether any flavor of AI, whether it's, generative AI, large language models, machine vision, machine learning, blah, 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 or it's, some type of IoT sensor, or this. It's how all of those things work together.
Agree. My current answer to that is I'm most excited about automation, intelligence, and integration.
And you could probably have given that same answer 5 years ago.
Yeah, maybe. But the thing is now, like the intelligence that we're using is delivering real results really fast. And before we were just we were constrained to some machine learning models. Now there's just so much happening simultaneously.
Yeah.
But it's always a convergence of multiple technologies. And then of course some shake out. Like I got super excited about wearables. I got super excited about
got 1, 2, 3, 4.
Yeah. So Ring, my Apple Watch is in my bag, but the most exciting wearable, and you and I both have a pair.
Meta glasses.
These Meta glasses.
Meta Ray-Bans.
And I owned Google glasses. I was
not too many of those out there.
I was a glass hole. And so I love
your words, not mine.
Yeah, these are my words. Because they looked idiotic, they looked terrible. They weren't prescription. They didn't really help.
Meta Ray-Bans. They're so functional.
Yes.
Out of the box.
Yeah. Music, talking on the phone, taking pictures and video, large language model embedded in the lens. I mean, it's amazing.
All of that. And not just for, us who maybe need readers, but I've talked to a woman who is in the industry. Her husband is sight impaired, and he is taking great advantage of those.
It tells you what you're looking at.
Tells you what you're looking at.
It's like, oh my gosh.
But we can now finally see it's not too much further down the road before they can also project something on the lens.
Yeah.
So we can have a bit of an augmented reality. I think the next game changer for the glasses, if we're geeking out on gadgets. My first Apple Watch, I liked it. It wasn't like irreplaceable until it had its own cellular connection.
Yes.
So I could actually do things on my watch without having to have my phone. The fact that we still call them phones is crazy, but my little mini supercomputer in my pocket. Once they had a cellular connection to the MetaView,
It's game over.
then that's the big thing. Although I do say I love my Aura ring a lot more than I thought I would.
Everybody who has one says that. I have held off on buying an Aura. I'm doing it when I get back because you're the second person in 2 days that have raised about this.
So much more than I thought. But I'm going to bring this back to enrollment. Bring it back to enrollment. And I'm going to talk both, specifically about enrollment processes, but also really enrollment is just a way to access customers and to sell them products. And so the unique thing and the pro and con about enrollment is it typically happens once a year.
Yeah.
Whereas most of our products, we're almost doing an enrollment-like process, but instead of employee-employer, it's member credit union.
Okay.
Here again, we have other distribution channels as well. I still think one of the biggest challenges so many people face when they're going through their enrollment options is figuring out what they need and being able to compare one plan to the next, especially with healthcare, which is so complicated. So on one hand, enrollment really makes it a lot easier because it's maybe the one time a year, maybe a couple actually sits down and talks about, okay, what do we need? What do we need for, additional life insurance? Or do we want to have our kids covered? Or how are we doing on vision and dental and pet insurance or legal insurance, all these other things that are now offered through. But you mentioned automation and the intelligence. And that's where I think we are on the cusp of some really exciting new customer experience options and interfaces.
Well, yeah, I could actually explain in plain English what a policy document says.
Amen. And help me understand what do I need in between this one and that one.
And the side-by-side comparisons for enrollment platforms and insurance are not that great. They really, and it pushes people to have to get a lot of outside help. Yeah. And again, I'm not a big champion of disintermediating insurance brokers because I think that insurance brokers help you identify.
I love my broker.
Yeah, me too. I use a broker. I use a broker for everything because I use them for gap analysis. Like, where are my gaps? Where am I not covered?
Anyone in Des Moines, Iowa, Jason Grams, shout out. Former underwriter, former nationwider, Jason Grams, Bishop White Insurance. He's my guy. Yeah. He should be your guy too.
There you go. Wow. Strong plug.
I gotta get some props here and there.
Yeah, mine's Tyler with Higginbotham Insurance in Texas.
Texas, you're covered.
Yeah, exactly. So I mean, there's some real room for improvement, but we finally, again, about that convergence of technologies, we finally have the tools in place to summarize large documents, summarize complex information, plain English comparative analysis. Yeah. Between coverage options, and even gap analysis. I mean, the ability to actually do it. It's remarkable. I've uploaded policy docs into Claude and ChatGPT, and they do a wonderful job of explaining them.
Now, that's not something that most, buyers are doing today.
No, not yet.
But
the early adopters are.
But the early adopters are, and in my role as a strategist, and like I said, as a bit of a futurist as well. I always like to play the game, James, of, okay, this is pretty cool, but what's next? What's the next turn of the crank? So we're already seeing people stopping using Google. They're not Googling things nearly as much.
I barely use it.
Exactly. Because now we're doing generative AI. We're looking to LLMs. And so from a strategy perspective, here's a random, thought. Organizations like my current employer, prior employers spent a lot of time and energy on SEO, search engine optimization. I don't hear a lot of people talking yet about GAI or, prompt engine optimization.
We're doing it.
Everyone's trying to figure that out.
I'll tell you what, we are very focused on how
you should be
on how we get
How do you show up?
All of the major LLMs to recommend and talk about us in there.
Because that's the exciting thing. It's also the challenging thing, also from as a citizen or a concern, who controls the LLMs will control the narrative.
He who controlled the search engine controlled the narrative.
Always has been.
I think Google really shot themselves in the foot in multiple ways. By the way, tangent alert. They loaded up the responses with way too many ads.
Yeah.
It was my search results feeds now are half ads, and it's really annoying.
Yep.
They junked up the interface. Google was brilliant because it was simple.
Yeah.
They junked it up, and then they rolled out Gemini prematurely, and its LLM results were crap, and they're getting better. But I tell you what, they've already lost me. So it's interesting. So let's wrap up with this. You've been on the venture side of InsurTech and FinTech as well. You just left that, actually.
I did.
After, again, your 3 refired stops in Iowa.
Yeah, I did it. Check.
And now you're on stop 4, which is a violation of the rules of.
Well, I think, after being out for a certain period of time, you're allowed to come out.
Okay, so it's like term limits.
Yeah, term limits out. You're eligible for an
reset. So we'll talk.
No,
we're not talking about the rest of the set. So let's talk about your time in venture side, in venture and InsurTech and FinTech. What did your experience there teach you that makes about what makes a startup truly successful in insurance?
Yeah, and I was very fortunate to see the investing side from a couple different perspectives. So, started doing venture investing for my prior carrier, EMC in Des Moines. We didn't have a separate CVC, but we were fortunate to get a sleeve from the board for alternative investments, and we were very specifically investing in what you can call strategic investments. So companies that we either had or intended to have a strategic partnership with, or commercial agreement with. That's actually how I got to know the team at Manchester Story. One of the companies that we had invested in at EMC was a company called BetterView that started in the drone space and then became one of the leaders in the aerial imagery interface. Of course, they were just acquired by Nearmap last year. But so we were interested in investing in BetterView. We were a customer. And Manchester Story, which is based in Des Moines, led their Series A, and we were able to get into that deal. Little did I know, a couple of years later, I'd go to work for Manchester Story, which now has well over $200 million across 3 funds. They have 24 insurance carriers and brokers that invest through their funds, early stage InsurTech, FinTech, even some health tech. And so I've had the benefit of seeing it from a couple different lenses. And James, if there were if there were a clear X-ray machine for investors to tell which ones are going to win and which ones aren't, we'd all be doing something else right now on a beach, because it's always that combination. I can give you the stock answers that every investor says. It's about the people first. It's a people bet. Yes, they need to have the technical chops and understand what problem they're trying to solve, but it's still around the people. But here's my advice to them. And I'll start with what was the biggest red flag. When I would have a founder come to me, whether at the VC or at the carrier, and say, hey, this is what we can do. Is there anything else that we can help you solve? That was my biggest pet peeve. Because I don't want to know what you can do. I want to know what you are doing. Because I have no doubt that, a talented couple of people with, some good engineers can solve just about anything given time and money. I don't want to know what you can do. I want to know what you are doing. And have you really gotten crisp at what problem you're trying to solve? It's that old, there was a lot of solutions out there looking for problems. I don't see as much of that, but there's still a bit.
Oh, it still happens.
The other key thing for founders who are selling into carriers to keep in mind is so many of them saw their solution as a product. But from the carrier side, I saw it as a feature. It's that whole product versus feature cycle. So here's an example. Years ago, had identified through an innovation team a business opportunity, business problem we were trying to solve for. So I go out to the conferences, I got my shopping list, I'm trying to find a solution for this, and there isn't one. But I'm like, oh, I could take the data set from this company and the APIs and the interface from this company and, some analysis tools from that company. And I can piece together these 4 different insurtechs to solve a business problem. What carrier is going to want to do that? We don't have the time, the energy, the resources to daisy chain 4 different solutions together. Now, there's some out there that are trying to do that for us now, but it's just too much and also too much risk. One place of the chain falls out. How do I easily put something else back in? And so it's really about that time and place. And are you solving a big enough problem? Or should you be from the get-go looking at who else has the other pieces of the puzzle to solve that bigger problem? So I'm working with 1, not with 4 or 5. But that's why I'm still very bullish on investing in InsurTech and FinTech. I just think the nature of a lot of those investments are going to start shifting. I think we're going to see a ton more consolidation, and financing rounds that are actually intended to, hey, we're going to go out and buy this other InsurTech, this other FinTech to round out our solution set.
Yeah, I'm an LP in 4 VC funds, even though I'm a militant bootstrapper with my own businesses. Hey. Obviously wrote a book called Be Your Own VC, but
thank you for the copy, by the way. I look forward to reading it.
My pleasure. But I wrote it as much for a manual on capital efficiency for venture funded companies as I did for companies who never want to raise. And I say that in the beginning of the book. It's not an anti-VC because I love my funds that I'm in. Yeah. We've had some great success together, and it's been a remarkable ride. And so that being said, there's a fairly high failure rate. Yeah. And I look for, do you solve your prospects' most important problem?
Oh, that's a great point.
And, are you solving their number 1 or number 2 problem?
Yes.
If not, you're going to fail.
I used to tell founders all the time, I love you, I love what you're doing, and I have no doubt you can help me solve a problem. But the problem you can help me solve is number 12.
Correct.
And if I can get the first 1 or 2 done in the next 12 to 18 months, that's a freaking grand slam in and of itself.
Yeah, I want them all to read a few books, but one of them be the Unicorn Within, which is all about open pain point discovery and identifying that top 1 or 2 problems. Because we've spent an incredible amount of time at JBK over the last 24 years solving clients' specific problems with custom development, which is hey, tell me your problems and I'll solve them. Yeah. Right? That's honestly pretty easy. If you're a good engineer, it's pretty easy. Yeah. What's more difficult is, hey, I'm going to plow investor money or my money into building a product that solves your number 1 or number 2 problem. Yeah. And I think that's the big thing. If you want to achieve product market fit, you have to solve their number 1 and number 2 problem.
I couldn't agree more.
And
it's really about understanding the customer.
Yeah.
And I don't care if you're a technology selling into a carrier or a carrier selling a financial services or insurance product to an individual. I don't know how you ever get to a measure of success without putting the customer first.
And their number 1 problem first.
Yeah.
Right, not the number 12 problem.
Here.
Jason Gross, it's been a pleasure talking to you.
James, I enjoyed it as well.
Out of Des Moines, Iowa. I'm guessing people can reach you on LinkedIn because that's what I have up in front of me right now.
Probably the easiest, best way.
So it's JASONGROSS, Jason Gross. He's with TruStage, and he's been there since July of 2024. Yeah. So you're coming up on your 1-year anniversary. Congratulations on that.
Still drinking from the fire hose.
Still drinking from the fire hose. I'm excited.
I know where the bathroom is now, though.
Excellent. Well, I'm excited for what you're doing there. I'm excited for what you've done. I for one, appreciate your commitment to this industry. As somebody who's committed the last 2 decades of my life to it, to fixing things.
Oh, thank you, James.
Yeah, it's just it's great to hang out with other people who are committed to solving big problems in the world. Without insurance, the world doesn't function.
Amen.
And so it's exciting, and good luck to your team. I hope that Iowa does well in football this year in the Big Ten.
Yeah, and hopefully the student case competition does well at the conference as well.
Yeah, I hope they win. Hey, like you, my Aggies aren't here, so I'll root for them.
Thanks, James. Appreciate it.
Thanks to all of our listeners out there in listener land. As always, this has been another episode of the InsurTech Geek podcast. This has been our interview with Jason Gross from TruStage. See you next time.
The InsurTech Geek podcast is all about technology that's transforming and disrupting the insurance world. And your host, James Benham, that's jamesbenham.com, with co-host Rob Galbraith at endofinsurance.com. We're taking you on a journey through insurance tech, so enjoy the ride and geek out.